hypest, most CHERPOW day of the month. Let's go, fam. Let's go. Gotta bring it today. Here we are, everybody. Today is the legendary, the long-awaited FOMC meeting. It's the first one in 2023. First one of the year. Got to be the best. We have our Fed rate monitor tool. Get rid of that. Sitting above us. 52 minutes until Mr. CHERPOW. Can I get a CHERPOW? Put CHERPOW in chat. Goes live and gifts us some insight into the next few months. Gives us some insight into the next few months. We're going to go over what the Fed is, what they're combating, you know, the warm-ups, the typicals. We're going to do, as usual, the Dixie chart. We're going to look at stocks. We're going to look at crypto. We're going to see what's moving because these days are historically the most volatile days that we see. Pretty much ever, period. These things are wild. We do tend to see whipsawing price action, so a friendly reminder to everyone today, be very careful with your trades. Pretty much any stop loss is likely to get hit if it's close to price action. We typically see either a move to the upside, then the downside, or a move to the downside, then the upside. Whipsawing out trades, catching traders on the wrong side, stopping out positions, etc. Today, we had over 500 waiting. I think we're up to 700-ish. Keep hyping up the chat, guys. We got some new emojis just for this wonderful event. If you have a membership, put them in the chat. They are the legendary CHERPOW emojis. Hype it up. Let me know you're here. Let's make some noise. The more you engage with this live stream, the more you like, the more you subscribe, the more you vote in the poll, chat during the live, the more YouTube sees engagement and says, let's show everyone CHERPOW. So we can do it with your help. In the last few streams, we have had thousands of live viewers. I don't think today is going to disappoint either. So let's jump into it. Ooh, my buttons are already not working. That's a good sign. That's a good sign. That's good luck. It played that intro music and then crapped out on us. Sign up with Bybit, our sponsor. Link in the video description and in chat. The #1 crypto derivatives trading site in the world. Trade alongside with me using Market Cypher, also our sponsor. Link in the video description and chat. Sign up using my link for a discount. It helps support the stream. I love you guys. That's it. Let's get into it. With 52 minutes to go, we have our Fed rate monitor tool. And what this does is it essentially guesses at what interest rate we may see in the upcoming notes released at 2 p.m. A quick summary of the stream, though. In 30 minutes after we start, we're going to have our ceremonial Googling. We're all going to get out a browser tab. We're all going to get ready, and we're going to Google and try to find the release of the notes as soon as possible. An hour after we start at 2:30 p.m., we're going to have CHERPOW himself live. We're going to see what he's got. Is he dovish? Is he hawkish? Is it a nothing burger? I will say, guys, it is typically a nothing burger in his speech because they're very heavily crafted. The language they use is not random. They use it as a tool called forward guidance, where they essentially lay out the next few months and how they see the economic state of the United States. So what we've been hearing in the last few FOMC meetings has been things are looking better than they were last year, but we are not at the pivot yet. I have a hunch. This may be completely ungrounded. I'm definitely interested in what you guys are thinking or feeling with these interest rate hikes. I have a hunch. We are going to see these BPS interest rates simmer down. We have seen 75s. These are historically large interest rate increases. We've seen 50, and now with a 99.7% confidence. I don't want to call it probability. I want to call it confidence because it doesn't actually impact the reality of what decision is made. So in 99.7% confidence, the market is looking for 25 BPS with a 0.3% looking at 50. So this is actually going to be very important. We've been talking about how markets have been down for a year, and so nothing burgers can tend to be a little bullish simply because it's a deceleration of the bad news, of the bad economic data. So to hear a nothing burger today would be pretty good. Whew. And the 25 BPS would be nothing burger. We have seen pretty much green candles across everything except for the dollar this month. That could be the market baking in this 25 BPS that we seem to be so confident about. My hunch is that we're going to continue. We're going to see 25. That's my opinion. We're going to continue to see either 25s going forward at our next meeting in March, or possibly even into the 0 BPS range. Now, I doubt they would call this a pivot. Once they start lowering interest rates again, we'll call it a pivot. And my hunch is by the time that happens, markets will have already priced in all this movement. And I think once the Fed officially comes out and says, we're pivoting, I think that's when we see the markets dump. So I might be a little bit more bullish than you guys. Definitely vote in that poll. It looks like 66% of us waiting for 25 BPS, 21% looking at 50, and 5% looking at above 50, 7% looking for 0. I'm on page. Let's get 0%. A 0% BPS hike today would send markets wild. They would wild out. We would see crazy green candles, in my opinion. Of course, there's no way to actually know what's going to happen, but this is the logical conclusion. Markets are pricing in 25. If we come in lower, we're going to see green. Now, on the 0.3% probability, says our tool here, if we see a 50 or greater than 50, watch out. Yikes. Likely markets will take a big old dump because they are not pricing that in, and that is not what they're expecting. Markets like predictability. They like to be able to know what's coming. When we follow that path, and I will give CHERPow the benefit of this, they have followed with what they have said. So they're being aware of markets, not shaking them out, not throwing them curveballs, but it's only a matter of time until things get shaken up. So it's going to be spicy. Let's get at least 1,000 likes today, guys. We're already up like to 400. You guys are doing great. I see a lot of names in the chat that I recognize. What's up, 4-star strength, Scottish crypto, TG Game Master, Ben Vaughn, random tutorials. I like that. Alex S. Doesn't matter. I need my COD. Fedox, Matthew Barnes. What's up, Matthew Barnes? If you're here, put something in the chat. Let me know you're here. Let's get it hyping. Let's get it hyped today. And as we do, let's turn on some tunes. This will take me just 1 second. There we go. Mostly for me. I don't like talking in an empty room. 52 minutes to go. We have our little indices over here looking at stocks. We see slight red days today. US 50, US 30, 500, Dow Jones, NASDAQ, all down roughly the same, just under 1%. We're going to take a look at those soon. Let's do a little education. Make sure this music isn't too loud. It is good. All right, a little education here. So as 2024 approaches and the U.S. sees a new election cycle, inflation is one of the hottest, one of the most important topics for the presidential election. In my lifetime as a millennial, that has never been true. This is big stuff. That is why all eyes are on the Fed today. So what causes inflation? What is inflation? It's a sustained increase in general price levels of goods and services in an economy over a period of time. So what this means is you go to the store and you want to get your dozen eggs, right? Dozen eggs used to be like $1.99. All of a sudden, your dozen eggs is now $4.99. That is a very extreme example of inflation, but basically it is the expansion of costs of all goods in an economy. And that is typically not a good thing. We could go into currencies devaluing, causing inflation, etc. But when in general, price rise, each unit of currency is buying fewer goods and services. Consequently, inflation reflects a reduction in the purchasing power of money, a loss of real value in the medium of exchange and unit of account within an economy. And this is why, or no, let's do it this way. Wouldn't it be great if we had currency that had a fixed supply? Perhaps one that couldn't be printed into oblivion, as every fiat currency has done in our entire human history. Humans are not to be trusted with the money printer. That is obvious. So the primary cause of inflation is an increase in the demand for goods and services relative to the supply, leading to higher prices. So this could be an organic increase in demand, or it could be, I'll call it a synthetic decrease in supply, such as supply chain issues, logistics, manufacturing, etc. Other factors can contribute to inflation as well, and that is the production costs, changes in monetary supply, supply shocks, changes in taxes, and government spending. That's a hot topic as well. We've seen in the U.S. Both sides of the aisle debating, arguing over the debt ceiling. How much money or how much money should the government be able to imagine into existence? We do this every day. No matter what the Fed is doing, money is constantly being imagined into existence. So the Federal Reserve has the dual mandate of balancing the economy and unemployment. They are the central bank of the United States, and they combat inflation by controlling the money supply and setting interest rates, as we've seen month over month over month since last year. Here is a little graph here that goes back to 1954 with the, I believe this is called the effective federal rate. Someone's ready. What's up, Matthew Barnes? Good to see you, brother. Keep smashing the likes and subscribes. Good to have you, my friend. Good to have you. As you can see, we are really not at all-time high interest rates. However, we've seen all-time high interest rate increases, to my knowledge. Back in 1980, interest rates were as high as 21%. What's up, Donata Cabrera? I got to turn that off for now. Welcome, bro. Welcome. You are now able to use the emojis, the legendary emojis. We have seen that since the 80s, that interest rate come down to when we hit 2008, 2009, effectively was at zero. It remained there until 2015, 5 years later, when the Fed very slightly increased these rates into 2019 and dropped them again in 2020 in response to the pandemic. Starting in February of last year, maybe even January, we have seen these rates increase again. So what really kind of catches my eye here as a guy who loves charts and spends way too much time on charts is this. While we probably shouldn't trade off of this, we see a pretty clear decline in interest rate. We have a descending trend line here. We saw our highs come down and our lows come down. It settled at zero twice. After it settled at zero the second time, in, let's say, May-ish of last year, we saw a breakout of that federal funding rate. And now we are basically searching for the next top. Will it go all the way to 20%? I highly doubt it. However, just breaking that previous high really is mirroring what we saw back in the 50s, 60s, 70s, with our highs broken, our lows coming up, and reaching a blow-off top. I don't think we're going that high, but time will tell. No one knows. The Fed will do as they've said, whatever it takes to get to their target rates. All right. Here it is. This is probably a cleaner chart. I already went through it. I think these gray areas are essentially recessions or recession periods, which is weird because we are and have been in a recession. It's weird. Have you guys noticed that people aren't calling last year a recession? Because why? Because they changed the definition? Seems crazy to me. But it's weird. No one will say it. I don't know. So let's see. The important data they look at: unemployment rate, inflation rate, CPI data, money supply M1, 0, and M2, the central bank balance sheet, bank's balance sheet, foreign exchange reserves, and loans to private sectors. So when inflation rises, the Fed may increase interest rates, as we've seen, to discourage borrowing and slow down economic activity. Check. Conversely, if the economy slows down and there is a risk of deflation or stagflation, the Fed may lower interest rates to encourage borrowing and spending. Inflation has both positive and negative effects on an economy. On one hand, it can stimulate economic growth by encouraging investment and spending. On the other hand, it can reduce purchasing power, leading to decreased consumer spending and increased uncertainty and costs for business, which can result in lower investment and slower economic growth. Talking about deflation really quick, stagflation, which we are not necessarily in danger of, but is possible if the Fed over-tightens in the future. Stagflation is a phenomenon where inflation occurs alongside stagnation or a decline in economic output. This combination of inflation and slow growth, maybe I messed that up, was considered paradoxical because according to traditional economic theory, inflation and growth are thought to be inversely related. Stagflation is generally considered to be a difficult economic problem because it is difficult to address both inflation and economic growth at the same time. All right, there's the boring part. We're done. We're done. Let's move on. Big numbers coming out today. We have more than just the CHERPOW speech. CHERPOW. I hope I get to see Gina today. My baby. ADP non-farm employment change down, way under forecast. 106 versus 178. That is going to be a, I won't say bullish, but perhaps a dovish encouraging sign to the Fed today. ISM manufacturing down slightly under forecast. Jolt job openings are actually up above forecast, almost 1 million. Job openings, in my opinion, equals unemployment. Unemployment up. If there's more job openings and there's not more jobs or employment, that might be a good sign as well. Crude inventory, 4 million to the forecast 0.3. I don't really understand that one. I'll do some homework for next time. I'll do homework for the next time. But what we've seen in general is softer economic data, and this is a good sign for a slow pivot, for a soft landing, etc. Today is going to be very important to that soft landing, or how the Fed sees what's going forward. Man, I'm running out of breath already. In the news, stocks are falling ahead of the Fed's rate decision. We're smarter than that, guys. Are they falling? They're probably doing as we see every FOMC, which is slightly whipsawing to either side, really just punishing traders looking to make a quick buck. On the popular economic news, let's see. Wall Street down, stocks down. It's weird because they're only down not even 1%. That's pretty volatile for a day, but they're not even down 1%, and every article is bearish. Something tells me we're going to see a bounce today. Something tells me. We have our legendary chart here. We're going to put it on the 1 minute. If I didn't F this up, which I did. Hold on. Loading. Loading. What we have here, we do this every Fed meeting, is we pull up the dollar and we pull up Bitcoin. And we watch them move in tandem or move inversely. If I can get this chart right. Why is that doing that? Come on. Come on now. There we go. I found it, guys. No worries. We got it. So once the price line reaches right here, we will have Googled, or we will be Googling to find that decision. CHERPOW speaks a half an hour later. So we'll have time to digest the interest rate. And there we go. This is our favorite chart for this time. Doing really quick, we're on the 1 minute analysis. What we do seem to see is in between the interest rate decision being published, for some reason they publish it half an hour before he speaks, God knows why. And by the time he speaks, we tend to see a very specific price movement. Of course, this is just a pattern we've observed. It is not a guarantee of what's going to happen today, but it's been pretty spot on. And what that is basically whatever direction we see Bitcoin or the dollar moving into the interest rate decision, we tend to see a reversal on its publish. Now that reversal, whether it be moving to the downside or moving to the upside, tends to reverse one more time when CHERPOW speaks. This is the whipsawing price action I was talking about. So if into the rate we see a decline, which the dollar may be suggesting right now, we tend to see an increase after CHERPOW speaks. Vice versa is true as well. So keep your eyes peeled. That's going to be 2 p.m. East and 2:30 p.m. East. It's going to get spicy. That I know. Let's take a broader look at the dollar as we have a little bit of time. We have about 10 minutes. So don't go anywhere. Keep smashing the likes, keep subscribing, share the stream. Crack a beer, roll a J. You know the deal. We've got 10 minutes. Let's take a look at the broader dollar right now. So everyone remembers, I actually remember waking up in September and being a little scared of the dollar. Throughout 21, the dollar was on a parabolic ripper. In Q4, I believe, that ripper came to a simmering halt as it topped out at 115. We have seen a pretty hefty retracement back to just above 100 on the Dixie. Quick reminder, the Dixie is a strength measurement of the dollar based against a basket of 5 of the major currencies. we might take a look at those if we have time today. Down 12% since its high, and pretty much back to support. We were looking for 100 critical level to the dollar over the last 20 years, topping out there in 2015, 17, and 2020. Reaching on down again to that level. It was resistance, and to see it move there and bounce, maybe a prime spot to find support at was previously resistance. We can see, yeah, last quarter, Q4, actually closed bearish engulf, which I'm sure I noticed at some point and forgot about. Let me get rid of that. There we go. Bearish engulfed on Q4 of last year. Savage sign for the dollar, and, well, this quarter as well. Q1 playing out as we might expect with further red. Even looks like it kind of back-tested that the green open of Q3. I'm going to use my fib retracement tool here. I just want to see something. Down to 100. Actually, that's pretty sneaky. So 108, 109 is really my dead cat bounce target. I don't know when or if it's going to hit it, but if we do see a rally off of 100, I'm still looking for that 108, 109 zone. We can see that would be the 618 retrace if we do reach all the way to 100. And that was, it looks like, not on the monthly, maybe the yearly close back here for resistance or support. So this is a pretty critical level, though the quarterly not looking so hot. 1 month in, pretty ugly hammer candles so far. 1, 2, 3, 4, now 5 potential red monthly candles. We do see some consolidation on the way up here for the dollar. There's a nice little order block between 101.6 and 103, and that is at least where it looks like last month bounced a little bit. We just opened February. I forgot. Happy February, everyone. No wonder there's a new candle here. That's weird. February just started. Not much movement, but the markets may be waiting for what happens today. Suspense. Suspense. Weekly money flow kind of rolling over there on the weekly time frame. Not super bullish looking to me. I'm going to set an alert just below last week's low, 101.4. It may break in this live stream. Time will tell. Dollar not looking super hot. Could we get Kramer to tweet that the dollar is going to the moon and Bitcoin's going to dump? That would be great, guys. Let's make that happen. On the daily, might see a little bottoming here as price doesn't seem as intent on moving down over the last, we'll call it 20 days. Maybe forming some kind of local bottoming. But money flow and market cipher beat, not really backing that up. Dollar looking weak, but we will have an eye on it. S&P 500. S&P 500, after multiple days, it looks like we have closed above 4,025. That was 2022's December high. I'm still looking for 4,300 to paint out a giant inverse head and shoulders, but we haven't gotten there yet. A break of that high, likely to send price up to that 4,300 zone. You can see we barely touched it there on the last day or second last day of January. So my alert is set. It's getting spicy. It's getting hecka spicy. Kind of quick review from the last stream. Bitcoin, not a lot's going on. We haven't broken 22.3, so we're not looking for the measured move to the downside at this point. Price has really just consolidated below 23.3 and above 23, a $300 price range, just over 1%, and not a lot is happening. The market's all waiting for what's going to happen today. It's suspenseful. 12-hour money flow. This is pretty much our bullish guide. We see that it flipped over in 2023, has remained in a very bullish uptrend. It has not broken yet. Then we do see momentum moving down to the negative or zero zone for the first time this year. We have not had a lower low on money flow, and we're coming off a higher low. So 12-hour has not been really changed. Despite this sell-off that spooked people, 12-hour is not out of trend. Breaking 22.3, we're going to be looking for further downside, maybe 21 or 20.9 and 21.8. Nothing's changed. Nothing's changed. Above us, resistance sitting at the critical juncture of the first ever. Spotted here for the first time ever. Weekly DeathCross. Weekly DeathCross. Looking for resistance at this zone, basically also moving back to May's low and August's high. This is a huge zone of resistance. That may sound scary, especially with a first ever weekly DeathCross looming. However, markets do tend to look for liquidity. And so when we have a really strong resistance, probability would say that we are going to at least test it, if not move through it, more often than we would expect. Very strong support and strong resistance, counterintuitively, do tend to get hit and break. You would think opposite, but you would probably be wrong. Looming. We were looking for this to happen actually on the 2nd day of February, and let's actually see. We are getting closer and closer. Look at this 50 kind of dimp down here. Let's make another quick, a quick, what do we call it? Estimation of when this will happen. Originally, we were looking for February 2nd, and it looks like February 2nd might not be the right timing. So let's pull this up. Are you going to work? There we go. No. Okay. Oop. There's my alert. We have 4 minutes till the decision is in. So it is time to start prepping the Google tabs. You may use Bing. You may use Yahoo. You may use anything other than things that are published before 2 p.m., random tweets, what your mom said. None of those sources will be accepted today. When we start the Googling and when the decision is out, what I need you guys to do, I'll show you in a second. Let's actually just get this date quick. This will actually be good timing. It looks like we've put off our DeathCross just a little bit. Just a wee. Looking for the 5th, perhaps. February 5th. Looks about right now on that timing. Yeah, between the 4th and the 5th. So we've moved that out about 2 days. That's not a huge change. So here's what we're going to do. Open up a new tab. Type in Fed interest rate decision. Or don't actually type that in. Type in your own iteration of that because we don't want everyone getting the same results. Go to tools. Anytime. Go to, we'll say, past hour. So right now, none of these are going to be correct because we have 3 minutes until this is published. Usually we get it from CNBC, Bloomberg. Those are usually the good sources. But look for the rate. Put it in the chat when you find it and also include your source. Please, if you just put in 50 or 25, we're going to throw that out because we need a source and that source has to have published it after 2 p.m. So in like 3 minutes. In 3 minutes, we'll get our reloads ready. We've got over 2,000 viewers. Let's effing go, fam. The spice is coming. The spice is here. Ooh, someone gifted memberships. We have enough time. Do we have enough time? Oh, my computer's being hella weird. Uh-oh. Uh-oh. I hope we don't disconnect. That would be such a bummer. I can't pull up the chat for some reason. There we go. What's up, Frank Soda? Life with Maine. Crypt Anon, Alan Hall, Off the Hex. What's up, John Thomas? Destructive, Fresh Sun, Bridge Bloke, Nomad, Guitar, C. Ron. What's up, Brandon? Pubo. It Flips, It Chips. I like that. Crypto Itachi from Naruto is here. When Gina now. Shorty One Not. Claudio. Remington. Anonymous. How you doing, man? Matthew Miller. How you doing? FX Street has live coverage? Of what? Of what, my friend? Martial Law, Ian, C-Ron, how you guys doing? It's going to get spicy here. We have under 2 minutes. Under 2 minutes to go. And we're going to be Googling. We have some new subscribers. If you haven't subscribed yet, now's a great time. It's the perfect time. Don't wait. What's up, Steven, Pendragon, Sladis, Ryan, Ostrom, Art, Chameleons, Lion, Solja, Manny Dulol, Mohammed Shaban gifted 10 memberships. You are the best. Thank you, man. Shout out to you. If you got a membership from those gifts or if you had one recently, put some of those new emojis in the chat. Let us know. Congrats. B. Scurf, Sweaty Dave, BG, C. Ron, Dean Putin, Barefoot, Fletch, Donatano, Cabrera, Sledge, Michael Norris, Matthew Barnes. Right on. Right on, my friends. We have under a minute to go. It's time to start Googling. Time to start Googling. Motoholic Ryer, Garrett, uh-oh. This is what was happening to me before the stream, and I'm worried my internet is being weird. I might need your help instead. I'm not even going to search because my internet's being so bonked. God, I hope we don't disconnect. My internet's being bonked, so I'm not even going to search. You guys search. That way I can keep up the, I can read the chat while we do this. The decision is in. It is in, guys. Google. Use your Googling. Use your Googling analysis, and Bitcoin's ripping. It's ripping to the downside. Holy moly. That's a nice little dump. 0.5% in not even a minute. The dollar taking off here. Woo. Dollar ripping. Bitcoin dumping. But now Bitcoin's bouncing. The dollar's still ripping. What is going on? The spice is here. I tried to warn you. Trading today is going to be a rough time. The dollar does not seem to stop here. Moving up to 102. This is actually a big move for the dollar. Not a big move in crypto. Big move for the dollar. Bitcoin, what is happening? What is even going on? This is by far the spiciest price action we've seen. 25 BPS. Where's the source? Where's the source? Macroeconomics. 25 BPS. Should we tweet it? Should we tweet it? Should we tweet it? Wow, this is crazy. This is crazy price action. My computer's not working at all. I'm gonna have to tweet it from my phone. We are seeing the dollar wick down. Bitcoin in a crazy kicker hammer candle. And maybe it froze. Did it freeze? Coinbase may have gone down. Nope, and we're back. And we are back. 25 BPS LFG. And I'm going to take a picture. I'm going to take a picture. You're all going to be in the picture. Say cheese. Take a picture. Say cheese. Cheese. There we go. That's a beautiful smile. Well done. You're photogenic. You know that? Very photogenic. Tweeted. It's out. Interesting. Interesting. What a crazy 1 minute candle. 1 minute candles do tend to be crazy, but usually not this crazy. I'm not going to lie. That was above board for craziness. We have seen a lot of crazy price actions here during these moves, but I really think that was the biggest one. We'll have to zoom back out to get a better idea. God, what is happening with my internet? Well, I hope we're still live. I hope we don't get kicked out. Maybe the man doesn't want us streaming. Maybe doesn't want us streaming. That was a pretty crazy candle, actually. Let's go to the 5, see what that looks like. 5 minute. Dollar. With maybe the highest volatility it's had in a long time. If you look back in these 5 minute candles, very small, at least comparatively. Long top wick. Dixie sellers coming in. Long bottom wick. Bitcoin buyers coming in. This is pretty darn spicy. Pretty darn spicy. Nah, it's hella spicy. Oh my God. 782 likes, guys. Let's get to 1,000. Let's effing go. We got it, fam. Keep subscribing, liking, chatting, sharing the stream. Now we're seeing Bitcoin come back down, the dollar back up. I'm going to rename the stream to Guy Yells at 1 minute candles. Tune in live. Old man yells at cloud. That's right. 25 is in. That's what the market was expecting. So that's probably a good thing. I would not expect the dollar to take off here on 25 BPS. I would not. But we'll find out. Bitcoin, I can see Bitcoin taking off, stocks taking off. Dollar wouldn't make much sense. But we are seeing the initial reaction. And we're going to watch it here live. Darth Maul candle on Bitcoin's 5 minute. So much has happened in this 5 minute candle. 2 more minutes to, or minute and 25 seconds to go. I don't even know what to say. I don't even know what to do. Shit's wildin'. Awesome show. Hit the like button. Thank you, my friend. What's up, Crypto Steve-O? Windell. Thumbs up. That's right. Bash Shell. Dow is down. Let's take a peek. Let's take a peek at our stonks. Take a peeky. Interesting. Actually, let's do it this way. Let's get a third chart up. Let's make it real messy for everybody. Real messy here. Let's get S&P 500 up. Boom. Interesting. So, weird. Do you guys see this? Or am I just reading into it? So, the dollar here, it's like kind of just, it's squeezed, right? It's just sideways almost with those high wicks. Dow, moving down. We're on the 1 minute chart, so be mindful. This is not a time frame that's going to be huge. So Dow kind of moving down, Bitcoin a little bit up, or at least it was. Maybe that's changing now. But interesting, as this was up, this was down, this was sideways. We got every direction. What's going to happen? What's going to happen next? I'm going to set really tight alerts here. With the interest rate decision in, the madness is about to start. Less than 30 minutes, 24 minutes-ish, until CHERPow speaks live. Let me pull up that. Let me pull that chart up. Or not chart. Pull that. Boop. There we go. So we got that live. That above there. Chat box up. There we go. 2:30 live. Ooh, chat's going nuts. All right. Interesting. It's interesting because I would expect crypto and stocks and assets. Maybe we should open gold as well. We would expect them, at least for this like high volatility moment, we would expect them to move opposite of the dollar. Very zoomed in. Gold and stocks looking identical here on the 1 minute chart. We have that low wick and we have essentially a descending channel on the 1 minute painting out. So gold and S&P moving almost the same. Bitcoin kind of on its own groove here. Not really that similar to the dollar, nor stocks, nor gold at the moment. Now stocks moving up, Bitcoin moving down. This is wild, actually. Gold moving down? What? What is happening today? It's CHERPow day. That's what's happening. Whew. Really quick while we have a minute to breathe, because we will be watching CHERPow soon. Crownanalysis.com. Our newest site, published this year, launched this year. It is a market, finance, news, business, economics blog, and we are looking for writers. That's right. If you're interested in writing and being published, we have a lot of great articles, and we want yours. Jump in the Discord. Send me a message after the live stream. Tell me you're interested, and we'll hook you up. While we don't have a paying method right now for this, we are going to, or moving towards a payment method. We're having problems with AdSense, but it will be paid. Right now, not as much. Maybe we can work something out, but looking for volunteers, also looking for people who want to write professionally. All styles of writing, all markets, all perspectives. Doesn't have to be technical, doesn't have to have charts, etc. So check it out, crownanalysis.com, bookmark it. All right, now that our 5 minute has closed, Bitcoin and S&P 500 looking a lot more similar with that Darth Maul candle. High wick, low wick, red body. Dixie's continuing to move up. Dixie moved into a 4-hour bullish engulf. Looks like Bitcoin traded into it, but now back below. Same with S&P. So as we zoom out to these longer time frames, we see more similarity between Bitcoin and stocks. However, Bitcoin doesn't look like it hit a lower low on the 4-hour, while S&P did. What is up, Mad World? 666. 666. Mark of Mad World. Stocks recovered. Dollar pulling back again. It's getting wild. Getting wild. Well, we can close the poll with 2,500 votes. 67% of us were right. Pat yourself on the back. Well done, everybody. Well done. What happened? 25 BPS. Big old nothing burger so far. Exactly what the market was confident in was delivered minutes ago. This is a great sign for markets in general. As we've seen recessionary period last year, we've seen downside price action for a year. Nothing burgers are what the market wants. It wants predictability. And we are maybe now seeing that. Maybe we are seeing this play out. As we now are bullish engulfed, taking back those losses. Let's zoom in here. Our theory of trading these is this. We may have gotten a dump. This one's going to be hard to interpret, actually. So, chat, let me know what you think. This is going to be different. Typically, it's trending in one direction pretty like, obviously. The 1 minute on the decision, we saw a dump. It moved back up. Does look kind of like we are going to paint out a symmetrical triangle. This doesn't have a clear direction to me at the moment. What we typically look for is at the decision publish for the market to be trending one of two ways. At the moment, I don't know it's clear. Guys, what do you think? When CHERPow speaks, we tend to see that reverse. So at the moment, It seems kind of mid, right in the mid. What do you guys think? Powell's speech will pump? Maybe. I would be more confident if we see a dump before then, though. Clear direction is to the right. Raviolon. You're right. So when CherPow speaks, we will actually start going back in time to the left. This has never happened before. It is a cause for concern. Left candles are real. This changes everything. Bum, bum, bum. Really just in the middle. Maybe we should refer to the dollar because the dollar we also see this play out. So dollar, I think, is more clearly trending up since the interest rate was published. More clearly. Bitcoin kind of murky. I don't know. I'm live, so it's hard for me to really go deep into it. So what we would expect based on the prior FOMC meetings is maybe this trend continues until CherPow speaks and it dumps. At least that would fit what we've seen. There is no guarantee that that will be what happens. I think S&P 500, weirdly also trending up more obviously. Is Bitcoin more obviously trending up now? Not really. S&P 500 has broken its high, so is the dollar. Bitcoin is not. Bitcoin being a butt, just in the middle, stuck in the middle with you. Stuck in the middle with you. Here we go. Let's put our horizontal here as well so we can have that there. Bloop. All right. Typically, we would see stocks continue to rally into this, and then when CherPow speaks, they usually reverse, completing our whipsaw. So let's see if our CherPow analysis is on again. We've had a hot streak. We've been very consistent, but maybe today's the day that hot streak ends. All hot streaks do end. What's up, Steve? Optical Art is here. Our resident bear. Go subscribe to Optical Art if you're not subscribed, guys. He is the yin to my yang, the bear to my bull. People think we like hate each other because we have different opinions. Why would you hate someone because they have a different opinion on what color candles are going to come, guys? Grow up. No, I'm just kidding. I don't mean to say grow up, but it's totally normal when you start in crypto. Even myself, I was guilty of like hating bears when I started because, I don't know, I thought they were bringing the price down. Guys, if you're going to be in this space for more than 4 years, you're going to see bearish. You're going to see bullish. There's not enough people here to, I don't know, burn bridges because of that. Who cares if they disagree? We're all going to be right sometimes. We're all going to be wrong sometimes. But anyway, subscribe to Optical Art. Great dude, great content, talented analyst. Love him. Thanks for being here, bruh. Gold moving up maybe higher than when the decision came out. Not really responsive. Not super responsive here. My music keeps stopping. This is weird. My computer's having strange problems today. No, not this song again. You just played this song. Get out of here. Ooh. Ooh. Let's turn this one up. May this song pumpeth our bags. What's up, The Trick 79, Possessed, Jeanette, Ray Gutowski. Mad World already got you. SpongeBob SquarePants, Roland Farsang, Markwin Jones, Shiny Robot, Steven Pendragon. Already got that one. Subscribe if you haven't subscribed. Smash the likes. Let's get to 1,000. Are we at 1,000? 950. We can get 1,000 right now. We've never gotten 2,000. We could do that today. We have 2,300 viewing. Friendly reminder, we are live on this channel doing analysis every other day. Tune in for the cutting edge of technical analysis. We cover the FOMC meetings whenever they are, and they are a special event, and they get hype, and I am hype, and we are hype, and I'm just so happy everybody is joining us for this. I know you have a choice in where you get your FOMC CHERPOW streams, but you should know that we are the original. We are the original. We did it first. Go on the channel. Look back. We were doing this 2 years ago when no one cared. Now everyone tries to scoop in. Look at this. Trying to scoop in on our event. Tony Vase. Yeah, good dude. Investing Bros from Jeb. They're good dudes. Blockchain Backer. Crypto Blood. Gareth Soloway. Prime XBT. Trading Academy. Sin City. Jason Casper. Love Jason Casper. Shout out. Looks like George is going in. Everyone's trying to get a piece of our pie. But you know what they don't have? They don't have this community. They don't have us. Thank you for choosing us. We'll cover every single one forever until I die. And then I'll have my corpse AI animated to continue covering these forever. Love you guys. We've got 15 minutes until CHERPOW is live. So let's look at some other charts. While this kind of just meanders its way, let's look at some coins quick. Put this on to 1 minute. Put this on to 1 minute. Dollar looking the most bullish, weirdly. But we do tend to see the fortune reverse as CHERPOW speaks, and maybe we already are seeing that start. Let's see. We'll come back to this. We'll come back to you in just a moment. Let's take a look at what alerts I've seen. Dollar, APT, Quant, Atom, FTM. Let's pull up some of these bad boys while we have a second. We can check total. FTM ignoring our TA, blasting off into the stars, reaching up to 55 cents today. Our macro inverse head and shoulders. Is it ever going to play out? I don't know. I don't know. But 74, 75 cents or $1 looking prime. If we see FTM continue, I'm not comfortable entering a position here. I definitely would be looking, as I always say, back at support 38 cents. But upside target 75 and $1. Not too shabby. Not too shabby. APT. Wouldn't this be wild if we called the top on APT? Using our Fibonacci extension and retracement tool, we took our swing high to swing low and we plotted out before it broke 10. In fact, I think it was before it even broke like 8. 1482 and 1760. Our 1618 and our 2 measured moves. APT cents. I see something I don't like. Cents has traded all the way to $20, overshooting our target. Our weekly close very close to our target. But I see a double top on the weekly. Double top on the weekly for APT. But reached into price exploration again, and now is actually pretty cleanly moving down off that double top. We didn't see a savage rejection. My eye would be pointed at 1482, our previous target. This may be a place that a savvy trader can take a position, or potentially on a retest of 17.5. Looking decent. Ignoring all pullbacks. Kind of annoying. What do we got? Doge. Let's look at Doge. Because we were talking about Doge on the last stream. And I said I think she's going to keep going. Ooh, baby. Oh, baby. Get rid of that. Well, there it is, boys. We were looking for our flat top ascending low. It looks like yesterday, Doge didn't quite hit 10 cents. God damn it. 9.81 cents. Today, it has retraced a lot of those gains, touching back. I had to turn that down a little bit. Touching back to that flat top. Holding here, great sign for 10 cents. Great sign. I like this move, this retracement. Ideally, close anything on Doge today above 8.8 cents, and it's looking pretty good. But I'd rather see it close or settle up higher, more closer to its open today. But this is not terrible. We had our flat top, we had our lows coming up, and we did see a breakout. And we actually have had a trade on a very similar price action to this recently, which I'm going to pull up very quickly for you. Almost 10 minutes to go. 10 minutes to go. TWT. We had this pattern. This is on the weekly, however. Flat top ascending lows, breakout, back test that flat top. That was where we looked to take a position. So far, so good. So far, so good. Very similar looking on a much smaller time frame here for Doge. So why did I think Doge was going to go up, even though we saw Bitcoin? Oh, let's pull up total next. We'll look at total next. Probably all we're going to have time for. Why did I think it was going to go up? Bitcoin was falling, kind of stuttering out, puttering out, losing upside momentum. So why did I think Doge was going to go up? How did I predict that it would go up, right? Well, the secret dark charts. The dark charts. Not really. The forgotten charts. The Bitcoin pairs. Doge BTC. I will say if I am a master of any chart, it is Doge BTC. I won't get into that today. But I will get into the reasoning behind this. So while the dollar pair looked pretty strong with that pattern, it could have broken out. But why did I have extra confidence? I had extra confidence from its BTC pair. What I was seeing is Doge finding support, finding buyers on its USD pair, while it sold off against its Bitcoin pair. Bitcoin pair is essentially, you can think of Doge USD divided by BTC USD. That's how new retail will understand it. But in my opinion, it's a much more meaningful valuation of the coins directly, not involving dollars. So what did we see? In December of 21, all the way to October of 22, Doge had been selling off from its all-time high against Bitcoin, finding support at 262 sats. Why is that important? Well, all the way back in 2014, that was the highest it had ever traded against Bitcoin. On our enormous rally from 15 sats into 21, it found resistance there. Before moving up higher, it had come all the way back. We saw that 365 resistance broken, and Doge BTC started painting a descending wedge, a bullish pattern that typically breaks to the upside. You can see I had that drawn here. That descending wedge took it all the way back to 365 sats where it was resistance, tested it as support, and that was our entry to go long. Boom. Boom. It bounced. I will say this, it's not out of its descending wedge, so it still could fall. But I like the bounce from support, and that was my tip-off. The market was trending up. It hit a major support out of a bullish pattern, and so it made sense. Doge was hitting support in USD and BTC, doubling the strength of the support, I'll say. That was a good call. Doge is done. Let's look at total in the 8 minutes we have left. 8 minutes left. Get ready. CHERPow is coming. We got not even 8 minutes now. Don't stop subscribing, liking, commenting in the chat. Doge is an S-coin. Sure. Well, in my opinion, everything's an S-coin except for Bitcoin, so takes two to tango. Looking at total. Total was pretty sweet. We've been following total. I think we were really the only people following this. Now, probably many people do. Total, similar to Doge in a way. Its previous all-time high, back from 2018, 761 billion. We did get faked out. Back in June, we had a pretty perfect test of 761 billion, falling from our 3 trillion all-time high. It was pretty much a fake out. It fell below the 200. I believe this is weekly. This should be weekly. Where is my indicator? 200 weekly. 200 weekly on total had only ever been breached twice in its history. So it bounced, and that was kind of a trap. Maybe this was the bull trap, honestly. I didn't think of it that way, because Bitcoin didn't follow this. But we saw a bounce back to May's low, and then fell again, breaking lower, but finding buyers at 761 billion. With the rise in Bitcoin we've seen this year, and pretty much the entire market, crypto alts, etc., we have moved back, zooming in here, above November's high, but way more importantly, above our 200 weekly moving average. We found resistance there for almost a week before hitting a higher low, reaching up to that previous resistance and back testing the 200 weekly. This is solid. This is solid. You can see this long trade placed here. This is essentially using the trade thesis of, if we lose the 200 weekly, I want to be out of a long position. Now this is total, and you can't trade total directly to my knowledge, but you can use this information, and you can even use this in validation for almost any long in the crypto space right now. Now, financial advice. Don't give financial advice. I'm just hoping you guys can see or get a little insight into how I do analysis and how I trade, so you can go forward and become self-sufficient. You don't want to be relying on signals on other people. Don't even listen to me. Don't listen to like what I think is bullish or not. Just listen to the analysis. Take into heart how I analyze or break down a chart and make your own decisions. We can see the 200 has not been tested since I drew this. Price moved to a higher high, but it has not broken its range lows. Total, not looking too shabby. We only have 5 minutes until CherPow speaks. We're losing some viewers. Keep the hype up. It's going to be like 5 minutes and a half now. 5 minutes, 33 seconds. Total hanging out below resistance. I don't hate it. Above the 200. Money flow actually looks bad. Market side for B actually looks bad on the daily for total. I didn't expect that. Looking better on the weekly, but that high VWAP high coming down, not really what I want to see. On the weekly time frame, we've traded to a bearish engulf. We haven't tested that 200 weekly yet. Weird. But I think we will. Might today. Resistance acting as expected right there. 1 trillion. 1.15, 1.4 trillion at August high. Next resistance to the upside. Now we're going to start looking at 1.3. So the takeaway from this chart, we can call it 1 trillion, but to be exact, above 969 nice billion. Things are looking pretty good for total, and that will extend out to every coin. Every single coin. I'll say very hard to be bearish for me below that 200 weekly, but that 200 weekly can be lost in one candle. You can see price is still very close to it, so don't get comfortable, but keep an eye on total. Don't sleep on total. Don't do it. Really quick, AXS. We only have a few we have like 4 minutes. AXS, I wanted to bring this up not because it's doing anything spicy, but because our in-stream trade, $10.22. This was resistance once, twice, 3, 4 times. Now potentially acting as support. That's where we're looking to take our long position up to our next resistance at 1916. So far, it's looking pretty good. I'm going to add an alert down here at 766. Looking for an 85% upside to a 25% downside for a, what, 3 to 1? 3.43 to 1 risk to reward. Pretty good. Pretty good. Let's go back to our main chart and get our analysis going as CHERPow is about to start. I'm going to actually play the live. Ooh, that's loud AF. Hold on. I'll tell you one thing, guys. If they've got nothing else, they've got the jams on their intro waiting for the Fed. They got the jams. There we go. It's very soothing, very relaxing. I like it. Okay. Okay. Weird. Honestly, this is the first time that I've seen this happen. This is the first time I've seen this happen. There's typically a very pronounced trend in between these. And we see that trend very predictably reverse from the publish of the interest rate to CHERPow speaking. Weirdly, we're not seeing either. This is very odd. Oh gosh, you better play. You better play, bud. There we go. You better play. Ahead. Oh, it's just an 18-second clip. Okay, sure. Weirdly, we're seeing just sideways. We did have pretty extreme upside wicks and downside wicks on our 1 minute candle. That was directly before or directly after the publish. That was pretty wild. But this does not seem to have a clear trend to me. I'm actually going to read the chat, though. We only have 1 minute and 48 seconds. Loud music, too loud. Yeah, I turned it down. Only have 1 minute and 30 seconds, but what do you guys see here? Do you see an uptrend or a downtrend on BTC? The music is from the Fed stream, by the way. I think the dollar is pretty clearly in an uptrend. But BTC, I just don't see anything. Stocks... S&P 500. I'm going to say uptrend. I'm going to say uptrend, though, as this approaches, it's much closer to where it started. So maybe that uptrend is also not super clearly defined. We may see in the next minute a trend appear. The Feds even have bad music. True that. Truth of that. Okay. I guess we're just going to keep listening to that. I don't understand. And everything ready for the powster. What a CHERPow. 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 Have a question, CHERPow? CHERPow. What a goof. What a guy. What a goof. Less than 1 minute. This is not a drill. Less than 1 minute to go. CHERPow is coming live now. Are we going to see a trend picked in the next 18 seconds. I don't think so, but maybe. Really, really sideways for this. Really sideways for this. We see stocks exactly where they opened, and we see the dollar slightly above where, not where it opened, where it closed before the announcement. Bitcoin down from where the announcement was. It's interesting to see the dollar and stocks and Dixie all moving in kind of different directions right now. Not typical. I'm going to refresh this page. There we go. We're live, baby. We're live. I'm going to turn this volume up. Let me know if it's too loud. I guess they don't have any sound yet. Oh, and I also don't have this up. There we go. We're live, baby. We're live. We are live. CHERPow. Where's Chairman Powell? He's late. There he is. Get your ass up on stage. You are 52 seconds late, sir. Time is money.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do.
Not a good start.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
You guys know that.
Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated.
None of that's good.
Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months.
But that's not good.
Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases.
That's a pivot
Shifting to a slower
making.
pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
No question. Why are you so hawkish? Fire up the money printer. Gina, please go.
Chris
Question for
Rugaber,
Gina.
the
You're not
Associated
Gina, get out of
Press.
here.
Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Dollar don't like it. Dollar now lower than it was earlier today. Gina, please go up next.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post.
Rachel, what a
Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
dollar might break its low. Like
So
we
I would
speculated.
say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect
Stocks
inflation
are
to
now
continue
up.
moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions.
Has your I'm sorry.
Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But you know, we'll update those forecasts in March.
Neil.
The dollar is going to break its low.
Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more,
Their highs.
but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and you know, quits are still at an elevated level. So by many indicators, the job market is still very strong.
Go to Colby and then Howard.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think, you know, we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those two options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in, and now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage. Whereas, of course, we have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly, and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years,
might be ready to go nuts.
the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together, although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature, it would be very premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring inflation down. And how do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
It looks like it's getting ahead of itself right now, buddy.
I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, this is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same, and we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is, research would show is sensitive to slack in the economy, and so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet, and I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps we'll see more persistent inflation in that sector, which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Complete the job. Good job. Gina, please, can Gina
Nick
Who are these
Timmeros, the
people?
Wall
No
Street
one
Journal.
cares about that.
Chair Powell, you observed several years ago that
CherPow,
we
he
learned
said
we
it.
can have a low unemployment rate without above target inflation. And we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming
I like this
months
guy now.
before raising rates again?
Now I like him. Just
So
stop there,
we've
Powell.
raised rates 4.5 percentage points,
Money.
and we're talking about a couple of more rate
Bitcoin
hikes
looks
to
freaking
get to that
awesome
level
right
we
here,
think is
retaking
appropriately
resistance.
restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're
Rejecting,
telling about inflation is,
retaking it,
and
bump
to
and
ourselves, and the way we understand it is basically
Spicy.
the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that
Bitcoin's
level.
looking strong.
We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Victoria?
CherPow, why is Bitcoin not at moon
Hi,
yet?
Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its
LRC.
own analysis of any legal constraints?
So your question is, would we, say your question again?
Will the Fed do what Treasury directs as it relates to making payments?
That's actually a
or
really
will it
important
do its own
question.
analysis of any legal constraints?
So you're really asking about, you're asking about prioritization in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal. I'm just going to leave it at that. This is a matter that's to be resolved
What was the
between,
quote?
it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions, so we're the fiscal agent.
Gina and then Steve.
Gina! Yes, finally.
Gina Smilik from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the
Yes.
Federal Reserve Bank of Dallas seemed to suggest that that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So the committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're going to write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think.
Beautiful question from
This is
the
not
lady.
something that the committee is thinking about or exploring in any kind of detail.
Well, you should.
In principle, though, we used to do was go every other meeting, if you remember,
Gina
25
for
basis
chair.
points, and that was considered a fast
Chairhead.
pace. So I think
Chairman.
a lot of options are available, and I mean, you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the
That was
point of
big,
deciding
though.
right now.
He said that they are going to raise the ceiling, and that's their job. That's big.
Steve
No one's
Leisman,
been saying
CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that
maybe
high,
it's wrong.
and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory.
Oh,
and
transitory.
that
I believe you.
Goods
You've never
inflation
gotten
will
us
move
with
up
that before.
fairly soon,
Yeah,
back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for
once.
core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far, we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get
Dollar is so weak. So much
certainly
downside
possible.
pressure.
Yeah, absolutely, it's possible. You know, it's a
Absolutely.
question. No one really knows. I think it's because this is
just
not
what we wanna
like the
hear
other
from our
business
Fed
cycles
chairman.
in so many ways.
Yeah.
It
Yeah,
may
we just
well
do
be
stuff. We just do stuff.
that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But
Well,
I
no one
don't.
really
I don't
knows, Mr.
That's
Powell.
not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of
Do
it.
it, stocks. That was your cue. You had to bounce. That was it. Bounce here. Keep going.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the
Dollar's about
full
to break
weight
low
of
again.
your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023. And the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view, or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
Everyone is worried.
So I do think
Everyone is worried now.
most forecasts and you know, my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think, you know, most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with
That's fat cats.
money, and
state,
many of them are
local
considering
government,
tax
fat
cuts
cats,
or even
all
sending
money.
checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year. And that's my base case is that there will be positive growth this year.
Oh boy, it bounced.
Rich?
Thank you. Rich Miller from Bloomberg.
Rich,
First of all,
Rich.
how are you doing?
There's
Fine,
just never a
thanks.
guy named
Good,
Core.
good. Second off,
Not coincidence.
I think earlier on in the press conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned
Dare.
3 months, that we've seen 3
Give us
months in a
an
row.
idea.
Governor Waller suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence
So I
metric?
don't
You
think
got an
there's
idea for
going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more
Dollar's
CPI
about to dump
reports,
again.
and we'll be
Insane.
looking at those carefully, as all of
looking
us
like
will, and we'll be
Yeah,
asking
really
ourselves,
high,
what are
look.
they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And you know, the one we got, I guess it was yesterday,
is.
was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve
He is on
2% inflation for the
defense
benefit of
today.
the American public. We're not. Market participants have a very different job. And it's a fine job. It's a great job. In fact, I did that job for years. But in one form or another. But, we have to deliver that. And so we are strongly resolved that we will, complete this task because we think it has benefits that will, support economic activity and benefit the public for many, many years.
Edward.
Gina, could you just talk again? You don't have to ask a question.
Thank you,
Just
Fed Chairman, for taking the
chat with
question.
us, please.
So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of
Stocks
course,
going up, dollars going down,
expected
Bitcoin
goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say
Just like the dollar.
this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation.
Let's go.
It may come down faster.
Timber.
It may take longer to come down.
Timber.
And, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, sending signals that we think that the game is won. Because, we've got a long way to go. It's the early stages of disinflation. And it's most welcome to be able to say that we are now in disinflation, but
we still have
that's great. But we
viewers
just
live
see
on
that it
YouTube.
has to spread
You
through
guys
the
rock.
economy and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So my forecast and that of my colleagues, as you will see from the SEP, and there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon.
Simon says what?
Thank you, Chair Powell. Simon
This is the
Rinovich
best
with The
FOMC
Economist.
ever.
May I ask
Not even
a
one.
further question about the language around ongoing increases? That, of course, implies at least 2 further rate rises.
Stocks are pumping,
If you look at
Bitcoin's
Fed Fund
pumping.
futures pricing,
buddy.
the implication
Here we
is
go.
that
Here
you'll
we
raise
go.
rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession, and we have inflation moving down. Into somewhere in the mid-3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast, really. Given our outlook, I don't see us cutting rates this year if our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy setting, of course.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, we understand, I personally understand well that COVID is still out there. But
Ooh, crap. I bet.
that it's no longer playing an important role in our economy. And, we've kept that statement in there for for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in a in the Fed's monthly or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Nancy.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer
Nancy,
with Marketplace. I wanted to go back to another thing that Fed Vice Chair Lael Brainerd said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet, but the whole point is, if once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, the more risk of something like that.
The
But
more
there's
people are streaming
not
it,
much.
talking about it.
It's more of a
Really their
risk. It
fault.
always has been more of a risk than anything else. By the
It's
way,
also
I
Tom
think it's
Crown's fault.
becoming less salient, and people are. We pick that up in conversations, and I've seen some data too that show people are. Gradually, they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low, with 3.5% unemployment and high wage increases nominally by historical standards. Why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that essentially we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Greg.
Thank you, Chair Powell.
Secret
Greg
fish
Rupp,
hype.
Market Watch.
Dude, thank you for
In the
super
minutes
chats.
of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way. It's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Go to Brendan for the last question.
No, Gina gets the last
Hi, Chair
question.
Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications. And I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk, the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
He's going to run. He's going to run. Run. Someone get him. Stop him. We have more questions, CherPow. This has by far been the spiciest FOMC meeting ever. The spiciest. We've had more viewers before. We had 2,500 at our peak. We've had more viewers, but they have never been this spicy. This is definitely the biggest mix-up we've seen. So, man, I was distracted through a lot of that with the dollar falling to a new yearly low, reaching down to 101, as we were kind of maybe talking about at the beginning of the stream. Kind of maybe. You'll have to go back and look. It's definitely doing some kind of bounce here. If it can get back above 101.3, maybe going back to 101.48. Let me see this quick. Coming back, we found support here. It broke very strongly. Through support. Secret Fish. Dude, Secret Fish is killing me, man. I was trying so hard not to, just laugh. I don't know. I don't know if I've seen you here before, Secret Fish, but thank you, my friend, for the super chats, and hopefully we'll see you. Hopefully you'll be here. We're live here every day. Every day. Every other day. Yeah, close enough. Every day. Make sure you tune in. Make sure you're subscribed to enable notifications, etc. We're going to be live again in 2 days, as we always are. We're going to go over the FOMC a little bit here. All I heard was hawkish, hawkish, hawkish. Hawkish, 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 hawkish. The biggest takeaway, the biggest thing for me, hawk or dove? Hawk. Let's put up a new chat. I'd be surprised if anyone votes dove. Biggest surprise for me really was he was talking about the debt ceiling and saying that Congress must and will. Very definitive language from a man who's rarely ever definitive. What we heard essentially was the same nothing burgers, and as we said at the beginning of the show, nothing burgers in a bearish trend when we're seeing reversal, typically kind of a good sign, simply because it is a reprieve from the bearish onslaught. The dollar reaching down to a new low, saying essentially we're not where we need to be, and we don't see the interest rate hike stopping soon. Really, the stars of the show, obviously, Gina, I love you, Gina. If you're watching, I love you. Were the questions. They're not usually so spicy. You could feel a definitive energy on the questions today. They're not typically like that. This was really spicy. Let's take a little recap here. Trading started on the S&P 500 just about 4,063. 4,063 now has traded up to a new yearly high. This looks like a range high break, 4,130. Let's go down to a lower time frame here. When did this wick happen? The 22nd? I don't remember that. That wick's BS. That wick's malarkey. Now maybe it's not. Maybe it isn't. Maybe it's not on the other chart. Let me pull up the other. No, I just closed it when I tried to open it. 1 second. Is this it? S&P 500. Yep, that's what I thought. Malarkey. Maybe this is like futures versus whatever. Anyway, broke to a higher high. We were speculating that could happen today with the volatility. 4,300. Target above. Looming. Will it make it there? We're going to have to be watching the dollar pretty closely. This is the biggest kind of dollar reaction we've had. Our 1618 extension from 4,100 to 3,764, right about at that 4,300 or August's high. And this is essentially where price rejected from off of our crazy S&P 500 trend all the way back in April of 22. If it can make it up to 4,300, I would like to see a pullback to the 4K range to complete the head and shoulders neckline of 4,300. That'd be pretty great. that would likely suggest new all-time highs aren't far away for the stock market. However, we're still very far from that. Trading at 4,100, we did have a really solid day today, up 1%. Continuation. Market Cipher B on the daily, looking for continuation for a close here today. We have a higher high in money flow coming off a higher high on our momentum, and we're breaking through resistance. Stocks look great. Tesla, we called the bottom, I guess. I need to do more stocks, guys. You guys need to like tell me to do more stocks because so much of my best TA has been on stocks, man. Tesla trading up to 182, breaking its range high, week high, year high, etc. I marked out this 5-0 line at 206. A rejection from there, reversal on Tesla from 206 can be a really bearish sign. You do not want to see, with this giant harmonic pattern, a rejection from the 0.5. That's still a 10% upside from here. I just got an alert for OP, so we're going to pull that up. Man, I got so many charts. OP breaking its range high. Nice. I'm going to get rid of that. We were looking for a descending channel to enter at 191. We got skunked. Price only went down to like 190. I don't know, 191.2. Who knows? But we're looking for this flat top ascending low pattern. So while we broke the range high here, doesn't necessarily guarantee moon yet. Does not guarantee moon yet. This very well may come back down for a lower high. We never know how long it's going to stay in this pattern. We don't know. But it's looking good as it broke its high. Let's look at our 1618, 293, and our two measured move, 325. Great upside targets for anyone who took a position closer to 191. Of course, closing at 250 here at the flat top. Also not a terrible idea if you're in some solid profit and you're a little shaky. OP is OP apparently today. What else is moving? I planned on just ending the stream after that. But let's see, because there seems to be some spice. OP is up 9.9%. DYDX. That's weird. DYDX is up. We actually bought spot of this a long time ago. And then learned that they had a billion, whatever, token, $1 billion. Yeah, it's probably a billion token unlock. Bought it back here at like $1.18. Now trading at $3.70 or $3.45. Let's see if we can spot our measured move. Where's this going to take us? $5. That's a great target. Psychological level for DYDX, $5. Is it going to make it there? No one knows. But that is a great target. Psychological level. It's right at the 0.5. I like this chart a lot actually now. What we see here is some confluence between extensions and retracements. Our golden retrace, our 618 at $7.80. Our two measured move at $7.60. They're very close together. Our 0.5 retracement, what we're looking to avoid on Tesla, 530, and our 1618 at $5 flat. This is a great target to close a position. Absolutely. You are looking at some, maybe not. You might have some bearish divergence if this rally gets sold off today. It actually didn't even break to a higher high today. That's odd. Why did I get the alert today and not yesterday? I do not know. Do not know. Don't think I placed anything here. Nope. Support for you below on DYDX, 250, 176 from the monthly time frames. I think 250 looking really strong for a play to $5. That would be a great trade. That'd be a great trade. What else is moving? Immutable X. I don't know what that is. What is it? It's doesn't have $1 billion market cap. FTM, obviously, we looked at the beginning. Arweave, let's look at total because it seems like everything is up. Total has recovered some of its loss today. Still trading below its range high. Unfortunately. Ooh, I got some heartburn going on. 12-hour. Our most worried about and looked at time frame on Market Cipher B right now. We're talking about on BTC, that momentum reaching down to the 0 line. We're seeing it potentially pinch here on a strong close in 3.5 hours. That's going to set it up to retest that range high. I do like that. I do. Again, quick reminder, as long as it's trading above its 200 weekly, remain bullish. Though, to be fair, I'm always bullish no matter what. Trading below the 200, closing below the 200, and for at least the short term, time will tell if that extends out longer, I will become bearish. Not actually, but I'll be looking for bearish price action. So keep an eye on that 200. That is of utmost importance on total. The reason that we're looking at it and not really looking at Bitcoin's 200 is because on total, it's already above the 200, whereas Bitcoin is not. So we see some deviation there from the total crypto market cap and just Bitcoin. Biggest movers, I don't know any of these things. Really low market cap, 500,000, 15 million. These aren't really even worth looking at. Let's close that up. We've had so many subscribers today. So much new fam. I love it, guys. We are live again in 2 days. So make sure you subscribe to enable notifications, and then go on your mobile device and enable notifications for YouTube. That's the only way to get them. Also, join our Discord. We're going to do a live airdrop of Bitcoin. I make every single one of you a Bitcoin holder just for being in our community. That's how much I believe in Bitcoin. Link in the chat. Should be in the video description. Discord.gg/TomCrown. What's up, Marcus, Arthur, Silva, Sarju, Secret Fish donated $300. My dude. I didn't see any messages, but I appreciate you. I see you. I won't tell anybody about you. Don't worry, Secret Fish. Polo Gucci, Hari Ryu, Andy, Manuel Goodman 23, amongst all the other ones I already shouted out today. There is a little time left. If you haven't subscribed, you want to get shouted out. Do it now or forever hold your peace until next stream. Get rid of it. Boom. And there goes the chat. He wants to ask about IMX. Who? LTC. What is LTC up to? I haven't gotten an alert, so I assume it's between our entry and under 100. Another great show. Thank you, Colin. I want to drive this home. We don't own the FOMC meetings. That's silly. Ooh, Litecoin did hit a higher high today. Let's go, fam. Let's go. Higher high. I'm liking this flat top. I'm liking it. I'm loving it. It's like McDonald's. I'm loving it. I had McDonald's yesterday, and I feel like crap today.
Good job, young man.
Secret Fish with a 2. Secret Fish. Secret Fish, buddy. I love everybody. You don't have the super chat. I love everybody. I appreciate you though, man. That's wild. I'm glad you're here. Hopefully you join us. I should schedule out the stream. Our next stream will be on the 3rd, on Friday. We're not quite done yet, but it will be on Friday. Let me really quickly set this up. It will be on Friday. Friday. I'm stalling because I'm setting this up really, really fast. Hold on. Don't go anywhere. We got some more charts to look at. We got some goodies. Don't worry. Friday at 1:30 p.m. East, the time we always go live. Okay, it's scheduled. Good. Hurry up, YouTube. Hurry it up. LTC. What are you doing? LTC trading up to 99.15, just shy of being a 3-digit shitcoin. I love LTC. It's in my heart. Just shy. $100 Insight, as we've been waiting for. It seems like forever. This is not the right chart at all. What am I even doing? Here we go. BTC sending me alerts. As I'm looking at Litecoin, our trade is doing fire. We're reaching up to that 100 mark. I'm looking for 121 in the future. Things are looking bright. They're looking light and bright. On the corn side, and Bitcoin making a move again. Holy shizzle. Find support or we go back down. Looks like we found some support as we've broken through 23.5. Let's go. Holy hell. Holy mole. Holy mole. Let's call it right here. Next upside target, 23,676. We have 2 measured move targets from our Fibonacci tool at the same level. I like that confluence. Ooh, man, my throat. Dude, what is happening? What is happening? Who is a network person? When I open up, I just try to go to FEMX to open up my trade. I keep getting this, though I clearly have connection because we're streaming. It says site can't be reached. DNS address? Like what? I use the Google DNS, I'm pretty sure. Why isn't it working? Gmail works. Gmail loaded up. I don't understand. I don't understand. Someone tell me in the Discord. I won't be able to read it in the chat here. Definitely join the Discord. Discord.gg/TomCrown. Check out crownanalysis.com. I can't stop, though. I can't stop. Bitcoin is up. I want it to be done. Bitcoin's up. And CoinBase stock just setting off an alert right now. We were watching this, I believe, earlier in the week or last week. TradingView seems to not be responding either. What is happening? This is the strangest. Am I being hacked? Am I under a hack attack? Well, I can't be. I can't not have connection because the chart's updating. What? AXS trade's looking pretty decent there, actually. Let's close a lot of this. Maybe that's the problem. What is happening? I've never had this before. Never had this problem. Gold. Gold's got a... Someone gave gold Viagra, apparently. Gold looking better than maybe everything. 1947. I do believe, not one nor two, maybe three streams ago, talking about how I think gold's going to hit 2,000 again this year. I don't know if it'll break, but I think it's going to trade into 2,000, looking very solid now off of a beautiful bullish hammer yesterday. I like it. Gold looking very bullish. FTM, higher high, reaching up for 75 cents. NASDAQ broke clearly of its range, 12.38K. Wow. Wow, everything up. I did not expect everything up today. It's all the way up. S&P 500 all the way up. Straight to the moon, Bitcoin's all the way up. Let's close all these tabs. These tabs. No one likes these tabs. Okay. Right, gonna let me load it now. Coin. There we go. Coinbase stock breaking out of what was a bull flag past 60.62 resistance from its previous support back in Q3, Q4 of last year. Coinbase stock looks real good. That's a good sign for crypto. I'm not really sure why. I don't know. I'm not really sure why. It makes sense that they move together, but like I don't really get it. Like, are people buying Coinbase stock instead of crypto assets or something? I don't know. I don't know why people buy stocks, man. 618 retracement, $236. But first, you've got to start retracing at all. And that seems like a move above 111. That's a 100% gain from here to get to. It's actually a lot to ask. But our next immediate upside target at 30. No, 30. I'm getting dyslexic today. I'm too excited. 34. I did it again. $84. $84. Looking a little closer. We have begun to retrace. That's looking good. That's my target. That's my target. I think maybe you cool off a little bit at 75. You pull back to 60. That was your resistance. Now it becomes support. And then you make a move to 84. And if all this happens, likely the crypto space is pretty healthy. That's at least what we've seen so far. Gold is I can't believe gold is doing this. I'd said this is the spiciest FOMC day ever, and it really is. We don't usually get moves like this. We get whipsaw, we get, like up down, but then it just returns to the mid where it started, and it's like a nothing. This is spicy. Now that we kind of can reflect on this, I talked about trading these and how it's not really a good idea, but what we do here and what we've observed here is when the interest rates are released, we see price trend in one direction. When CHERPow speaks, we typically see it reverse. And look at what happened. That's exactly what happened, though in the moment, I wasn't really positive what direction it was going. Now in hindsight always provides clarity. We saw from the publish to CHERPow speaking, Bitcoin sold off. As soon as he started speaking in the next 5-minute candle, rallied up. This theory is apparently true. It's just a theory, right? Like, we just observe this. But another FOMC meeting, another one, backing that up. Stocks aren't quite as perfect, okay? But we'll say this is a sell-off, and then as soon as he's speaking, boom, rally to the upside. The dollar, this is the biggest, like, of all of this today, the biggest thing, even though there's been multiple. The dollar, absolutely following this, moving up, actually, even since we started streaming. As soon as CherPow spoke, boom, crashed to a new yearly low. Looks like hot garbage. Dollar looks like hot garbage. Could be on the 1 minute double bottoming. On the one. Meh. What a stream. What a day. What price action. What wildness. It's like all of our targets are hitting in every direction. Absolutely bonkers. Bonkers. Punisher. We already looked at Doge, bro. Spamming it. You know, I was gonna actually look at it, but then I realized you were spamming it. And so now we won't. We already looked at it, though. We already looked at it. Bitcoin breaking 23.5. Heck yeah, bud. Heck yeah. Let's go. What's up, Queenie Brown? Queenie. Piotr Kukulka. What's up, my dude? Oh no, Y2K, how you doing? Hurry for physical gold, stay away from virtual gold. Absolutely agree. By the way, guys, maybe a great time to say this. Like, gold-backed cryptocurrency is the stupidest idea ever, by the way. It may sound like a good idea, but what's the point? It's just, again, not physical gold. You're trusting that they have it. I agree with a bunch of gibberish letter names. I don't know how to say it. If you're going to invest in gold, spot fizz is the way to go. That's my opinion. I would never buy a gold IOU because we can't verify the supply of gold. You're just buying a piece of paper. And at some point, the margin or the run will be called on them. And you're going to be left with a piece of paper instead of gold. And you paid for it as if it was actual gold. What's up, Sean Daly? I bought Charlie Lee's bags. Same. Welcome, friend. You're in good company. Mohammed Abashiri. Welcome. M. Bessard. Alexandri Braga. And Mark Kelly. And of course, shout out to Secret Fish, making this stream extra juicy, extra secret, extra spicy. Bitcoin's still moving, so I really can't go anywhere. I do need to do one thing, though. Give me 1 second. Don't go anywhere. Smash like, subscribes, join Discord, etc. while you have a minute. Sign up for Bybit under my link. You'll help support the stream, the #1 crypto derivatives trading platform. Great. Ready? It's going to be literally 10 seconds. Hold on. I might not even stop talking. All right, I'm back. See, I told you that won't be long. There we go. Gold is up, OP is up, coin is up. Dude, this is wild. And Bitcoin reaching our measured move target 23.6. Put some outside the door. Whew. I don't know. Should I just stream all day? We have 1,500 viewers. I don't know. I don't want to go anywhere. I feel like if I go somewhere, if I stop streaming, it's all going to reverse. It's just like going to be bad. I don't want that. If this happens this week, at the start of the stream, we hadn't broken our swing high here at 4,100 on S&P. And I said, we may see today that run to 4,300. Holy shit. I can't believe that happened. I need to start trading stocks. Guys, I've made all my money in crypto. I'm very happy. I wouldn't have made that much if I invested in stocks. Never would have made it to this point. But at this point, I feel like I just hit stocks so hard. Their TA is so much easier. They're like, they actually do what they're supposed to. Like if they hit support, they bounce. If they hit resistance, they usually sell off. Like it's unlike crypto where you basically roll the dice. And then after the dice is rolled, you're like, all right, what's left? Maybe it goes up. Maybe it doesn't. Nice. Doge, we said earlier, bullish engulf. We've traded to the open. Finding strength. Finding strength off of that flat topped pattern. I'm digging it. 5. Fair enough. Still looking for 10 cents. Absolutely still looking for 10 cents. Gold broke its high because I just got an alert. Oh my god, I'm never going to go anywhere. Pickle, by the way, if you're still timestamping, don't worry about it. Don't even worry about it. This is just going to be ADD time. We're just going to look at a bunch of things that pop up. Did it break? Thought I said it here. Yes, it did. Gold broke to a new yearly high. Woot. Woot woot. 2,000 in target. Sights set. Measured move, 1998. What a good year. A bunch of good games came out that year, like Diablo 2. Litecoin reaching for 100. I'm so trolled it didn't actually hit 100 though, because I've been waiting to tweet about it hitting 100 for, I don't know, a year. 99.22. Oh my god. Really? You're just gonna be like 78 cents off? Bunch of BS. Getting scammed here. Getting scammed here, boys. Look at that 12-hour. Quite a change from the start of the stream. However, at the same time, nothing has changed. Above 2,300, that's our, or 23,000, that's our support. We have moved to the upside, but we haven't broken our range high. And so it still continues to trade what looks like a sideways channel to me. Good news, sideways channels, horizontal channels tend to break to the upside, so could be worse. Upside target would be the 20 or the 50 and the 200 weekly moving averages. That's a range of like 24.3K to 25.3. That's looking pretty good. LRC ripping and rhyming. This is one of the best trades we've had recently. We caught support at 25.5, found support again at 31.2. This chart's actually hitting support and bouncing, not skipping them. S&P 500 is going absolutely bonkers. Holy shizzle. Absolutely bonkers. Live pump. I'm going to add pump to the title. Going absolutely bonkers. Gold's going absolutely bonkers. It's still moving up, as even like since I looked at it 1 second ago. We see the 5-minute continues to the upside, breaking its 1950 high. Trading at 1951. S&P 500 still climbing. I don't think it's going to reach 4,300 today, but if it did, wow. I should have just said today, right? It's starting the march. 41. You guys heard it. You were here. If you were here in the beginning of the stream, literally heard me say it. That we may see that run to 43 start today. This is wild and out, man. Wild and out. Let's go. Higher. Bitcoin weirdly lagging. Weirdly lagging. I'm getting so many alerts I can barely keep up with myself. We still have 1,400 viewers and the CHERPow stream is over. I love it. Love it. Gold breaking to another yearly low here in the last minute candle. Breaking that low, I'm looking for our measured move down to 101 flat. Flat. Gold just can't catch bids, man. Just cannot catch bids. Did I say gold? I meant dollar. Dixie cannot catch bids. There ain't no bidding. Just selling. But really, what is selling of the dollar? It's buying of other assets. It's not really. No, it's you're not selling the dollar. You're just buying other stuff. Starting to think OP is like going to make that move now. Gold, coin, OPT, Tesla, yep. Oh, I keep hitting the Twitter button accidentally. What the heck is this? Danger's waiting for you, my love. Render DYDX. Cosmos, we'll look at Cosmos. I tweeted about Cosmos earlier because it was breaking out. I didn't realize that Litecoin was breaking out as well. That must have been around the same time. Nice. Nice, 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 nice. Finally. Finally above that descending trend from our little harmonic harmonic bed. Descending trend, we saw it consolidate, and we even talked about potentially the similar or same move as Litecoin, which was finding resistance, popping through, back testing it, and moving higher. At the moment, we've seen it pop through, moved through 14.3. That was our target. Next upside resistance. I mean, I'm looking here, 17. But if you break 15, even 8, Cosmos is looking really good. It has been. It has been looking really good. Nothing's changed in that regard. Past weekly resistance. 15 psychological. Possibly. Little profit taking there. But on the monthly, into the new month, Atom has taken its previous monthly resistances at that 14-ish, 30, whatever. I mean, at this point, it is early in the month, but at this point, you start thinking about those big retracements. Where's the big retracement? Our 618, about $20. Show you. Loving it. Litecoin might break $100 today. I'm not going to call for it. I'll call for it. Litecoin's breaking $100 today. Probably wrong. Please don't blindly listen to me, guys. I'm wrong all the time. I just do my best as any trader. No trader is right all the time. If anyone says they're right all the time, or they could guarantee return, they're scamming. That's just not how it works. No one's right all the time. The best traders in the world are wrong. Probably upwards of like 50% of the time. They just know when to bet. That's really the trick. Total really looks like it wants to break 2. Oh my god. Everything is up. It's so green. What a hype day. Dollar is down. Everything is green. I love it. Short on Bitcoin 23.8. Maybe. Could be a good call. God, I keep hitting the Twitter button. I'm not trying to. I don't want to keep hitting that. I'm trying to hit the Discord. Make sure you guys jump in the Discord. Look at Eth. Yes, I forgot last stream. I'll definitely look at Eth this stream. Look at it right now. Uh-oh. I sold a tiny bit, I'll be honest with you guys. I wanted to take more profit on Eth, but I sold into the rally up here at 0.77, 0.88 or whatever, and I didn't have orders until 0.11. And so on this drop, I might have sold that little bottom. I only sold a very small percent of it. I just wanted to have a little more profit taken because 0.7 is really, really high for my average on it. Selling it there, not huge, but it was a small position. But it looks like maybe I sold the bottom, the local bottom there. So I got the dollar value of ETH looking very good. Looking very good potentially. Momentum's pinching. It's pinching. That's what we want to see. It is pinching. Is it over here? We looked at that at the beginning of the episode and said, man, I don't like that it's reaching down, but we could see it pinch. It hasn't happened on BTC, but we're seeing it potentially with a close here on Ethereum. Looking good. 1577 was our kind of range support. We're seeing the 4 hours taken off from there. 4 hour doesn't look the best. It doesn't look the worst, but I don't get a good read. I don't get a great read there. Like that dollar, or like the daily though. VWAPs come into the 0 line, momentum's pinching. If Ethereum closes up here, doesn't sell off into close, 1772 still our upside target. But we might start aiming higher. We're really at the range where breakouts to the upside start giving us really big areas of volume voids. Really big areas. That's good. That's good. Strong close today. Move to 1772. You break 1772, you're on a fast track to 2100. Great profit taking target. You can see this is our 618 measured move. No, 618, not our measured move. Our measured move is at 27, which is also basically our next resistance above that. You can see how they start having distance. Like down here, when we were in the symmetrical triangle, very, very, very stacked supports and resistance. And as we move up, we start to see these volume voids, and that's going to allow price to accelerate if it's pushed through those levels. Pretty spicy. Pretty spicy stuff. Ethereum's looking good. Like I said, my sell might have been that local bottom there. Either way, I'm okay. Sold, I think it was like just over 10%. So very small profit. Very small profit take. Will not be too upset if it runs. Maybe I'll fill those 0.11 orders finally. That'd be great. Convex Finance with a straight green dildo. Looks like the whole market with a straight green dildo. Holy. When I said coin was looking for higher, man, I did not think it was straight up. But maybe it is. That's a bad bet. We see a little wicking on our top there for S&P 500. Maybe seeing a little, yep, there it is. For like the first time, a little wicking here since the only up. If it breaks any more to the downside, the spice for it today is probably over. But that's just for today. It has not begun retracing yet. 12.3 for NASDAQ. It breaks. We'll see just how far or how much power the bears have. Are they going to bring it down to the 618? Going to bring it down to the 5? Or will they push it all the way down? Time will tell. But if it stays above 12.35 right here, it's still in an uptrend. So let's add alerts. It's reaching for it. Go back up. Just touch it, go back up. Touch it, go back up. Release the power. Power overwhelming. Power over burn, baby, burn. Who played StarCraft? If you played StarCraft, let me know. Definitely don't play StarCraft anymore, but used to play the crap out of that game. This just looks bad. It is a descending channel, like it is. So is it gonna bounce eventually? Gonna break to the upside eventually, but where? Doesn't seem to be showing any signs of stopping here. Projecting from the high trend back to the middle of the channel. So what do we see? Boop. Touch the top of the channel. Move down. I don't know. Time will tell. Reaching lower and lower into $23 low. Ooh. Ooh, did we catch it? Bounce there. Don't go anywhere. Don't go anywhere. Stay there. AXS trade up 7.6%. Literally from, I don't even know, like how many hours ago. What's happening? It won't let me do it. $4 hours ago. 4 hours, 7.8%. Nice. Noise. Yep. Did a new 4-hour candle just print an hour ago. That's probably it. It's always on the 4, man. It's always a 4-hour. Whenever that rolls over, it's like crap gets boring. Are you going to break or hold there? I don't know. I think we're seeing an indecision candle across the space. Just total back that up. Nah, total green, baby. I don't know. We may have more spice to come. However, we've been live for like 2.5 hours. It's time to go. I love you all. Make sure you jump in the Discord for your airdrop of BTC. All I want for Christmas. What's up, man? Alerts, crypto, Hindi. Keep subscribing. Keep smashing the likes. I'll see you guys on Friday. You'll be redirected to that stream. Crown out.